Okay, so in this lecture, we will look at key levels, price action key levels, how I spot key levels from price action perspective, and which levels, again from price action perspective, are important for me and where I pay attention the most. But first, what is key level? Definition of key level. I see key level as a area level where price made in the past really important and significant move, or price level where price spends the most time. Because when price consolidate, it means that in the market is some sort of balance and price accept and like trading at this level. And when price in the future reach this level again, I expect some reaction off of this key level, and I want to trade this reaction. Key levels are often called support/resistance zones. Me personally, I look for these key levels or these support/resistance zones. Swing highs, swing lows, order blocks, and range high and range low. Don't worry, I will show you in the following lectures of this module what is range, how you can identify the range, and what is range low, what is range high. So these are the main key levels from price action perspective. I repeat, from price action perspective, which I pay attention to. I also look for volume key levels, which are, for example, volume area high, volume area low, point of control, or high volume nodes. But these key levels are identified through volume. So this is topic for volume module. From my experience, the most precise and used price action key levels are swing highs, swing lows, because these levels are most attractive for traders and you can see really nice volume around these levels. Therefore, I trade those levels the most. So every morning I wake up, I do my morning analysis where I basically marked up my key levels with alerts. So whenever price reaches key level, I received alert. And in that moment, I know, okay, I should be in front of my computer and I should monitor this key level with order flow, footprint, volume, and etc. Again, I don't trade blindly only on key levels. I use them as some sort of area of interest where could be potential setup for long or short. But I never trade blindly off of that. As I said, after price reach one of the key levels I just mentioned, I open first of all volume. If there is volume, I switch to footprint and I start looking at things such as absorption, continuation, etc. And every of these will be explained in following modules and following lectures. So you will get good understanding what I'm talking about module by module. So let's look how I identify great order block key level. When I look for key levels, I usually switch to 4-hour time frame. And in case of order block, I want to see some fair value gap being created after this order block. When there is fair value gap being created after order block, this order block is valid because fair value gap shows me intention and aggression and strength of buyers or sellers. Therefore, I can expect some reaction off of this order block in the future. If you don't know what is order block or what is fair value gap, here is quick explanation. Order block is last bullish or bearish candle before some aggressive down move or up move. So it's a little bit paradox because if you want to see bullish order block, you want to see bearish candle with following aggressive up move. And if you want to see bearish order block, you want to see bullish candle with following aggressive down move. And exactly this aggressive up moves or down moves cause price to create fair value gap, which looks something like that. So when you connect those things together, the result is valid order block which I use as a key level where I want to potentially trade off of it. When I look for swing highs and swing lows, I switch to 15-minute time frame and I start looking at these aggressive bottoms or tops. Because as you can see from these levels, price made aggressive up move or down move. That means there was a lot of money which pushes price higher or lower. Therefore, I expect some reaction off of this level because there was interest in trading. Someone big sold or bought a lot of contracts and this behavior leads to price move aggressively higher or aggressively lower, as you can see right there. Because you can see quick and aggressive sharp switch between supply and demand. Next key levels, which are really important for me and which I take as a really significant key levels, are range lows and range highs. So we will dive to this topic in following lecture of this module.